Welcome to The Explainer. Today, we are unpacking the absolute high-stakes intersection of artificial intelligence and cryptocurrency. We're diving deep into Herman Strange's groundbreaking book, Advanced Strategies for AI-Driven Crypto Investing. It's this wild space where cutting-edge cognitive computing meets 24/7 financial volatility. If you want to understand how the smart money is actually adapting to the future, well, you're in exactly the right place. Let's get into it.
Here is our roadmap for today. We'll be navigating the hype and the reality through 6 key areas: the AI crypto revolution, deep learning and NLP, the evolution of trading bots, advanced portfolio optimization, risk management strategies, and finally, the regulatory landscape.
Section 1. The AI crypto revolution, the intersection of algorithms and digital assets.
Let's start by examining how the rapid evolution of cognitive computing is attempting to map one of the most volatile financial environments on Earth. Our entire journey today is anchored in Herman Strange's comprehensive book. We're going to explore unlocking the real potential and, just as importantly, understanding the strict limitations of deploying AI and crypto trading, because it's really not just about letting a computer run wild, it's about structured, intelligent integration. The crypto market never sleeps, and honestly, neither do the algorithms attempting to master it.
So, this brings us to a huge fundamental question. Can machines truly master the volatile crypto market? I mean, the central issue isn't whether algorithms can execute trades faster than a human. We already know they can do that. The real question is whether they can consistently process a market that's driven by highly unpredictable human emotion, random social media frenzies, and sudden global events.
Think of it kind of like this. The crypto market is essentially a turbulent ocean, right? And AI tools, well, they act as advanced navigation systems, processing the data. While these tools can crunch massive data sets and plot a brilliant course, they absolutely cannot stop a storm from happening. They are incredible navigational aids, for sure, but they do not control the weather. And that highlights exactly why we need to understand how they actually function under the hood.
Which leads us to Section 2, Deep Learning and NLP, Decoding the Data Deluge.
To really grasp the potential here, we have to talk about memory in artificial intelligence. Unlike traditional feed-forward networks that literally just look at data in isolation, recurrent neural networks, or RNNs, and long short-term memory networks, LSTMs, actually possess a form of memory. This is a massive deal because it allows them to capture long-term dependencies in sequential price data. Basically, they can identify subtle patterns that a human trader would completely miss.
And this memory capability ties right into generative adversarial networks, or GANs. This is a fascinating dual network system made up of a generator and a discriminator. Essentially, GANs pit 2 networks against each other to create highly realistic synthetic market data. So why does that matter to us? Well, backtesting trading strategies is usually limited by finite historical records. GANs actually allow us to test strategies against simulated, highly realistic market scenarios that haven't even happened yet. How cool is that?
Then we have natural language processing, or NLP. This is the AI that interprets human language to analyze news and social media sentiment or to spot emerging topics. These NLP algorithms scan millions of tweets, Reddit posts, and news articles in real time. By using sentiment analysis and topic modeling, they can objectively measure whether market emotion is turning positive or negative long before you ever see it reflected on a price chart.
And here's the crucial payoff. Researchers at Zurich developed a deep learning model that achieved over 70% accuracy in predicting Bitcoin's long-term price movements over a 6-month period. Now, 70% isn't a flawless crystal ball, but in the finance world, an edge like that is absolutely staggering. If you find this analysis valuable, please like and subscribe to Knowledge Lighthouse to help us bring more truths to light.
Moving on to Section 3, Evolution of Trading Bots, from simple scripts to deep learning.
Those advanced algorithms we were just talking about, they are practically applied through trading bots. And man, we've evolved drastically from bots that just execute simple if-then scripts to these highly sophisticated systems that adapt in real time via machine learning. Today's landscape has a bot for almost every strategy. You've got Haas Online for deep backtesting, Gecko for open source simplicity, and Zenbot, which integrates actual machine learning right into its core. We're also seeing platforms like Profit Trailer handling complex multi-pair trading. But keep in mind, they still face vulnerabilities like unexpected security breaches and execution latency. They aren't magical money printers, folks. They absolutely still require human oversight.
Let's jump into Section 4, Advanced Portfolio Optimization, Rethinking Modern Portfolio Theory.
Beyond just executing individual trades, AI is fundamentally shifting how entire cryptocurrency portfolios are structured, balanced, and mathematically optimized. Here is the paradigm shift. Traditional modern portfolio theory, or MPT, assumes asset returns are normally distributed. But we all know that is completely false for crypto. Machine learning alternatives, on the other hand, are specifically built to handle the extreme volatility and those crazy black swan events inherent to crypto assets. It's just a much more realistic mathematical approach to this highly specific market.
And we are already seeing institutions apply these advanced theories. For example, Bitwise launched the first algorithmic crypto index funds. Grayscale uses traditional trust for digital assets to bring that big institutional money in. Crypto 20 tracks a top 20 algorithmic index, and Pantera Capital utilizes advanced AI models to manage long-term digital asset portfolios. Make no mistake, the smart money is leaning heavily into algorithms right now.
Section 5. Risk Management Strategies, Hedging Against the Storm. The harsh reality of investing dictates that the most advanced AI in the world is absolutely useless without strict risk management protocols. You have to protect against sudden market downturns. A highly practical risk mitigation framework includes 4 main steps. First, diversifying your assets across different sectors. Second, setting automated stop-loss orders so you can automatically exit a position before a loss becomes catastrophic. Third, running scenario analysis and stress tests for extreme market events. And fourth, utilizing strategic contract hedging.
Let's zoom in on that last point for a second. Hedging with options and futures means using financial contracts to offset potential losses from holding underlying digital assets. Basically, hedging allows an investor who is holding a large crypto position to purchase options or futures contracts, which effectively caps their potential losses if the market suddenly plummets. It's essentially buying insurance for your portfolio, and it is absolutely crucial. Finally, we reach Section 6, the regulatory landscape, navigating legal compliance. We really must confront the complex, often fragmented global regulatory environment that governs these AI-driven financial strategies. Because let's face it, you can build the most profitable algorithm in existence, but if it violates compliance, you're out of business. The legal landscape is incredibly fragmented. In the United States, the SEC treats many tokens as securities, while the CFTC oversees commodities. Over in the European Union, they're setting proactive anti-money laundering guidelines. Meanwhile, Asian nations are all over the map, ranging from full-out bans in China to actively regulated thriving exchanges in Japan and South Korea. Your AI and your strategy must be programmed to safely navigate these incredibly complex jurisdictional hurdles.
As we look to the future of AI-driven investing, we have to end with a provocative question. Does the ultimate edge in future finance truly belong to the best algorithm or the human managing the risk parameters? Perhaps the true advantage doesn't actually lie in the code itself, but in the human wisdom required to set the boundaries, manage the risks, and navigate the inevitable storms. For the complete deep dive, own the paperback. Get your high-quality paperback edition on Amazon via the link in the description. Add it to your collection today. Please share this video and check the description for more.